a stock that's giving 10.13% dividend yield based on today's price. Hey guys, welcome to Dividends Friday, and today I'm going to talk about a stock, and let's guess what stock is this. And before I continue, remember to subscribe to our channel. Thank you. We have hit the 4,000 subscriber mark. And please click on the notification button so that you get all the updates on Dividends Friday and all other interesting videos. So right now I'm at Desaru Coast Adventure Water Park. If you do not know where is it, it is about a 2 hours drive from Singapore right into JB. Because it's school holidays, I'm bringing my kids right here. And one interesting thing is this: as I drive in, this is one important sign. For Singapore cars, please make sure you top out your petrol tank to 3/4 at least, otherwise you'll get a fine. Now, why is that so? Because the petrol prices has differences in Singapore versus when it is in Malaysia due to currency exchange. And the topic that I'm talking about today is in terms of petrol. So this is the company that I'm talking about. It's called Sinopec. It is a China company, 中国石化. It is in the long form, let me show you. It is called China Petroleum and Chemical Corp. Now, this is a very interesting company for a few reasons, because in some of the other videos previously, some of the audience is asking me, can I talk about stocks that will reduce tax implications? Because if you're buying US stocks and they give you dividends, you will be taxed like 30%, or rather there will be withholding tax of 30%. You can see from this company, the revenue is increasing steadily over the years. And it is come to a certain stagnant portion, but let me share with you, I think there's certain growth potential. And what is this company about? Let's go through some very key points. Now, there's a chunk of words here. Let me just highlight some of the important portion. Sinopec is one of the world's largest oil company. There are quite a number of them that's very large. And Sinopec is one of the largest in China. Sinopec, Petro China, and also this company called CNOOC. Okay. Now, it is listed on the Hong Kong, London, and New York Exchange. Why is this interesting? Because depending on where you are right now, there are audiences all over the world. You may want to choose to buy stocks from different exchanges that has different tax implications. So, for example, you can buy directly from the Hong Kong Stock Exchange, and there will be less tax implications as compared if you buy from the New York Stock Exchange. If you are staying in Singapore, there is. Okay, and this particular company has 30,000 stations across China, and it is accounting for 60 to 70% of China's crude oil imports. Why is this important to us again? Now, as China continues to grow, crude oil or gasoline or petrol or gas, these are good indicators, or rather, as the company grows or the country grows, they will need more and more of this energy. So if you believe the growth of China, this may be a company that we can look at. So right now, the company is focusing on shale gas development in China. Now, when I look at this statement, right, I do not really understand what shale gas. I hope I'm pronouncing correctly, like weir gas, here gas, shale gas, correct? So I went to did a search on what shale gas development. And in Wikipedia, it says that shale gas is natural gas that's found trapped within shale formation. Wow, what a useful statement. Don't understand at all, man. It's like ask them like, hey, what is acai bowl? You know, recently I'm into healthy diet. What's acai bowl? And they tell me, oh, acai bowl is acai in a bowl. Okay, no, doesn't matter. We go in and dig even further. Nothing is going to stop us. Let's understand what's shale. Okay, now with some visual, shale is like a rock. Okay, it's like a clastic sedimentary rock. Okay, I realize there's more and more words that I don't understand, but basically these are gas that can be extracted from rocks as they drill into oil gases. I'm not an expert in this, but I roughly get the idea. And when you read more about it, the shale gas portion is interesting because it is believed that it can reduce greenhouse gas emissions, so it's healthier, and it also helps to actually like increase the supply of gas. Okay, because oil, you know, there's limited supply, but now they are looking for alternative ways of actually drilling oil or getting gas. Okay, so this is the idea. And we coming back to the company that we're looking at. So Sinopec, it is a Chinese company, and you can see that the estimated recoverable shale gas is the largest in China. What this means is there's a lot of potential when you're an oil and gas company in China involved in the shale gas industry. However, one thing to note, the latest report is from 2013. I couldn't find the latest like 2018 or 2019 report. But based on this, it is an estimate as well. However, the potential is there. You can see. So the reason why I'm looking at this particular company, there is potential to grow as well from this shale gas development and also the growth of China. Now, one thing that's most interesting to me, why I'm interested in this company, is because of the valuation. Let me take a look, or let me just show you based on the competition. You can see PetroChina is here, BP, Exxon. Let me just show you the price to book ratio based on all the oil and gas company. Right now, this company is below book value, 0.96. Actually, a few days ago when I was looking at it, it was 0.8 something. Unfortunately, it's Dividends Friday, so I'm doing this on a Friday. Doesn't matter. For the long run, I believe it's still a very good buy. Okay, I shouldn't say that. I believe it's still undervalued. Okay, I shouldn't say that you should buy or it's a good buy. Now, the next portion, price to earnings ratio, PE of below 10 as compared to the rest. Later, I'll show something about this PE or earnings, because this earnings, there was a sudden jump this year. So is it sustainable? Is it something that's accurate? We have to take into account a margin of safety. However, based on just pure valuation wise, it is considered cheaper than its peers. The most attractive portion, drum roll. Okay, I already clicked on the animation, but doesn't matter. The dividend yield right now is about 10.13%. This is ridiculous. So the question is this: is it sustainable? Can it continue to give us this kind of dividends so that our money works at 10.13%? I mean, how often can you find a stock that's giving you 10.13%? So let's take a look at this. We can see that the earnings per share for China Petroleum and Chemical, look through here, the EPS, it fluctuates quite a bit. It's a cyclical kind of a company. Interestingly, not that much in my opinion, because you take a look at the income, you take a look at the revenue, it goes up and down, but they are still making money overall. Now let's look at the dividends. They have been paying dividends consistently, only some drops in certain years. So now let's take a look at this current dividends. It's 0.56 Chinese yen. Okay. Now my question is this: what's the worst case scenario? Maybe it drops by half. Even if it drops by half, it becomes like back to like last year 0.28 or something like that. It is still 5%. So when there's a huge margin of safety, when the dividend yield is at 10%, in my opinion, it is quite sustainable. It may not sustain at 10% rate, but what is the worst case scenario? It's better than buying a 5% company and not sure. I mean, equally, no company is guaranteed, correct? So this company, it gives us a margin of safety. And the payout ratio, pretty much quite consistent. Recently, it fluctuates to a bit high. But generally speaking, again, I think it is relatively sustainable. I've checked the debt ratio and quite a number of the other portions. It is still okay. Let me share with you the thing that's concerning me, okay? The thing that concerns me about this company, the biggest risk is this. It is the net margin. You realize I've been talking quite a lot about net margin recently, and net margin is so important. And you can see that the net margin is hovering around 2% to 4%, or it goes down even to 1.6%. This is the biggest concern I have regarding this company. Okay, because let me show you this. If we compare to the other competitors, this is the company we're looking at, Sinopec, or China Petroleum and Chemical Corp. Oh, by the way, I also did a research. I'm trying to find out whether it's owned by the Chinese government, and apparently it is not. In fact, PetroChina it is state-owned, but not this company. Does it really matter? Well, typically I feel that it's safer if it's like owned by the big boys, correct? However, let's take a look at this. This is Sinopec. You can see the margin is over here. Let's look at the biggest oil and gas company in the world, Exxon. It is actually 6 to 7%. It is double that of China Petroleum. Now, the issue is this. Of course, you can look at it in a few ways. The first way is, well, there's potential for them to increase their margin, become more efficient, and therefore become more profitable. But this is hope. Their historical records is not so good in the sense in terms of efficiency. One main reason, as I read up, is because their petrol prices is very highly regulated by the Chinese government. So this is one big issue. So understand that this is one huge risk, okay? And of course, the other one is I think I mentioned that it's cyclical company. Now let's look at PetroChina, their nearest competitor in China. And PetroChina, you can see their margin goes up to even 10%, but slowly drops to even 2%. So it's not so easy in the oil and gas sector in China. But I think when you compare PetroChina to China Petroleum, the Sinopec, okay, China Petroleum seems to be more consistent in terms of their efficiency. PetroChina fluctuates a lot, okay, a lot. And PetroChina is more involved in the upstream, meaning to say they're going to dig for oil. And China Petroleum, they distribute oil and refine. Now, the last company we look at is Sino. This is a very interesting company that I've been looking at for many years and very much more efficient. They also are in terms of the whole entire exploration to distribution. So this will be like, I would say, the most efficient company of all of them. However, in terms of valuation, SNP, okay, which is the ticker symbol SNP if it's in China. Otherwise, in Hong Kong, you just have to type China Petroleum. This will be one company that I will be collecting this month. So this is back to Dividends Friday. Okay, I'm hanging here. So I hope that you have learned something and let me know what you think. Of course, again, remember to diversify. There is risk involved in this company like any company. However, I think that the valuation is very attractive. I hope you enjoy yourself and don't just watch. Also consider whether which one you want to collect, okay? I'll see you next Friday. And next Friday, I have prepared something really interesting and special. So remember to click on the notification button. Otherwise, you may just miss it, okay? I'll see you then. Goodbye.